Yo, what's good, my people? Today we're going to talk about how I make a high six-figure income, day trading Forex, what you need to be looking for, and all of that, right? But before we get into that, I got to give you a scripture today, and we got to talk a little bit, all right? Scripture today going to be Matthew 3:2. Repent, for the kingdom of God is at hand. Understand that the times we living in is no joke, y'all. The Bible is unfolding off of the pages every day. Things are transpiring so fast that if you're not careful, it could be it for you. You know what I'm saying? So I want to tell people, look, whatever secret sins you got that don't nobody else know about but you and God, fix it. You know what I'm saying? If you're lukewarm right now, fix it. If you're backsliding, fix it. This is not time to play. Time is running out. Time is short, right? Do not play church. Don't play with it. Don't play with Christianity. Really lock in and have a full, transparent relationship with God, because it's about to get ugly out here in these streets. All right? Just got to keep it a buck with y'all. All right? So let me explain to y'all high six-figure income now. It was like a low six figures. Now it's a high six-figure trading, right? Just trading in general, day trading. I'm going to show you exactly what I do. I'm going to show you exactly how you can do the same thing and how simple it is to eat. And then I want you to not only learn this, but I want you to share it with somebody else in your family that you can trust, or a friend or somebody on the internet. Don't even matter. Just each one teach one, because we got treacherous days ahead and I need my people to eat. You feel me? So without further ado, let's hop in this video.
All right, let's get down to business. All right. So for my Forex traders out there who's just trying to get a breakthrough, right? You're trying to get something to work for you. It seems like ain't nothing working for you. Let me tell you why. You need self-control. You need discipline. Those are the two main things. Self-control and discipline. All right? All right. Next thing you're going to need is you're going to need to have at least two strategies. At least two. Two solid ones that you can count on. When one setup ain't there, you can count on the next one. All right, so I got a little arsenal of strategies. So let's go over my first one. All right, I got a rule. All right, I use the 200 moving average, which is this one. It's usually an EMA 200. All right, this blue one. And I use the 20 moving average, which is this white one. All right, and that's usually simple or EMA. It doesn't really matter, as long as it's a 20. Okay. Now let's go over one strategy of mine. All right. If I ever see the market close above the 20, then close above the 200, and do a pullback at the 20, then I know this next move is mine, right? Or if it pushes above and closes above, you can then take that same trade as well for a buy. Remember, your stop loss will always go at the previous zone below, which could be this one, this one, this one, this one, on down. Just depending on how deep your pockets are, you put your stop loss there. All right. One thing I want you to notice is that when the market comes up, it didn't come back down here and hit no stop loss. It went straight through. It did a pullback here. This could be a second entry. All right. Remember that could be a second entry. So let me remove some of this so you can see. I might need to even zoom in even closer so you can kind of see what's really going on out here. All right. So market goes above the 20, pushes above, right? Pushes above the 200, closes above. At this point, we can enter here. Buy. Let's put a B for buy. This is my buy. Stop loss here or here, doesn't matter. Or here, doesn't matter, right? Stop loss there. Let the trade run. As long as it stays above the 20 and the 200, we're solid. Even if it dips below the 20, but it's still above the 200 and your entry's here, you're free to hold, right? Okay, so let me tell you exactly what you're supposed to do when the market pulls back. So we go here, we pull back. You can then get a second entry. Okay, second, it's number 2. I'll put a 2 right here. That's your second entry. First entry here, pull back, second entry. You didn't hold that one, right? Now, if you want take profits, always go to the next zone above. That could be take profits. If you're just somebody who wants to let the trade run and play all the way out, you can do it like that. All right. So now, once we do this pullback and we start to move up, let's say the market starts to move up to about right in this area right here. You then take the stop loss you have here and you drag that to the pullback area. So now all of this profit in here is secured. Okay, that's all your money, that's secured. All right, once the market gets up here and it pulls back again, okay, and then let's say it continues up, and this stop loss, wherever you had this one, you now move that into profit, and you continue to hold until the market decides it wants to dip down and hit whatever stop loss. But if it doesn't, you just keep moving your stop losses up, and now you're still in profit. All right, so I call that, you know, the true trend. That's the true trend joint, and I do have signals for those as well. All right, I mean softwares and systems for those. But look at it, it does it again. All right, market shoots above the 200 and the 20, right? We close in here. Then it made a big gap. You see all this space between all this area in here? This big gap, that's what you want. I'm gonna give you some more sauce here in a minute, but let me just show you. We shot above the 200, we shot above the 20, we closed above. At this point, you can get in, right here. Some people can get in right here, but it could retrace and go back down. So we get that close above, sometimes it will come back down, but that's why you get your stop loss. You keep a tight enough stop loss. Just really depends on, you know, if the volatility is crazy or the news is hitting crazy, then it might smack your stop loss and then go right back in the direction. That does happen. But, you know, put your stop loss at the previous zone or 2 previous zones below. So if that's the previous zone right there, then you might want to go a little bit further down. Again, depending on how deep your pockets is, you calculate that money, you know, based on what you're willing to lose. All right. But let's say we enter here, the market goes for a buy, pulls back, boom, does the exact same thing again. What do we do here? Second entry. Second, boom. Where do we put this stop loss? At the previous zone below, right here. So your stop loss will be here. Your second entry is here. You're still in the first entry. You're good to go. We never came back down and hit the stop loss, so we're in there. Market skyrockets. Must have been news or something. You eating really good. Okay. At that point, you could just take profit in here. You get one of these good candles. You get something like that on the US 30. I mean, you already eating good. Anyway, it's on the H1 higher time frame, so you're eating real good. You can go ahead and take that profit. If you're somebody who wants to just try to hold that thing long term, go based off of the 200 moving average. The 200 moving average, as long as we don't close below that or go below it, you're good to hold because it's going to carry the candles. Now, anytime the candles go above the 20 usually carries it, and you know, every now and then you get that dip below, but it still hasn't passed through the 200, so you're good. But that's how you get your first and second entry. And again, if this would have came up here, pulled back again and did that, then that would have been, you know, if you wanted to enter again, you could, but if not, then you would just move your stop losses up, right, to protect all the profit that you had in here. So keep that in mind. You might have to watch this video a couple times to get that sauce. Now, that's pretty much the true trend, right? That's the true trend strategy, where you're just trading directly with the trend. That's how you could do it with the 220. Remember, when you got a short squeeze, right? A short squeeze, meaning the two moving averages are close. All right, that's good. When you get to push both, pull back, boom, take off. So as soon as we close, we enter here, this candle. Okay, boom, stop loss goes. Previous zone below could be here or here. We got that money and we take off. All right, so that could be one strategy right there. The second strategy I love to run with, though, as well, higher time frame overbought, oversold levels. Okay, so check this out. H1, H4. Now, again, I do have softwares that automatically give you these trades. If you want those under the description below. But if you want to do it the manual way, cool. Let me teach you this the manual way. All right. Now, H1 or H4. If you ever, and I repeat, if you ever on H1, H4, see the stochastic or RSI or the TDI, whichever one you use for overbought, oversold, get to this 92 level. Make sure your levels is 92. and then 6 on the stochastic oscillator. RSI is usually like 95 and 5. All right, 92 and 5, 95 and 5, somewhere in there. All right. When you see that, we know, okay, the market has been buying too long, it's been going up too long, and it has to turn around. That's what that means it's exhausted up here, right? That means the market is exhausted. That was this small one right here. If you go straight up, we should land here. That was this small one. Yeah, that was this one. That's still about 2-3 hours of a drop because we're on the H1. That wasn't the one we wanted, but if we got that little drop, cool. This is the one I want right here. Now, what makes this one different than this one? Well, first and foremost, let me always tell you something that anytime, and I do mean anytime, these candles get away from your 20 moving average and your 200 moving average, it has to, this is a guarantee, it has to come back and touch the 20 and or come back and touch the 200 as well, right? Sometimes it will just touch the 20 and bounce off. Sometimes it'll get close to the 20 and go back up. Sometimes it'll break below the 20 and come to the 200 or close to the 200. Understand that, all right? So anything on a higher time frame, understand since this is a 1 hour, these are 1 hour candles, okay? So imagine selling here and holding until we get to this 20 moving average. So that was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. That was almost 24 hours, almost a full day, pretty much a full day, right? Of holding this trade from here back to the 20, okay? That's a lot of pips. That's good money, right? You would have made great money off of that. Now, if I sold here, stop loss will go at the next zone above. You would have to go to like the H4 or the daily to find that. So what I usually do, let's see. Let me just grab a horizontal line. I'm gonna put it here, right? I'm gonna zoom out and then I'm gonna go to maybe the day. I might have to go to the daily to find it. Let me go to I'm gonna go H4 first. See if I see anything else that may give me an indication of where the next zone is. Sometimes you can find it, sometimes you can't, because this looks like all I have here is that. Let me go to the daily right quick and see if I can find it, and if not, then I'm gonna show you what I do after that. Daily, boom, because we might be at an all-time high, so that might be good. That thing, yep. So I think right now we were at an all-time high, so this is an all-time high for a US 30, right? So there was no data for us to know where the next zone was. So if you don't have that data, you make up your own. At this point, you would just go until you're ready. You would have it go until you feel like you've lost enough. So for instance, if I sold here, right? Let's say I drag my stop loss. So I'll just show you. Let's say entries here, stop loss. First I'm gonna do, let's say I'm gonna just do 0.85 cents, right? My stop loss, let's say I wanna lose $540, boom, right? So that right here would be my stop loss, okay? And then my take profit would be down here at the 20. So let's say right there, 1,600, right? Risking 500 to make 1,600. Beautiful, okay? So from here, from the entry to the 20, $1,600. If it decides to keep going, I lose 500. Now, what can happen sometimes, and sometimes it might irritate you, is that the market might smack your stop loss and then come all the way down. You're like, dang, right? So what you could do, if you have a deep enough account and your account is hefty or a little hefty, maybe, not 1,500, but let's say 2,500, something like that, 3,000. You can have a pending order right there where your stop loss is as well. You know what I'm saying? And that way, if you still believe in the trade, you can take another one. You know what I'm saying? And hold it until you get there. That's one way of doing things. Okay. Now, the second thing to do, the second thing will be to always remember market structure. Okay. So downward market structure in a downtrend will go down, pull back, lower, pull back, go lower, pull back, lower. Just keep doing that pattern, right? Do you notice that pattern here? Absolutely you do. So pay attention to it, because let's say you want to hold the trade even longer, and you notice it starts to make market structure. So you notice we pulled down, we did a pullback, and it didn't come up and break here, and it didn't come back up here, but we started to shift and go down again, right? Boom. At this point, let's say we just start to break through. You wait on the next pullback. If the next pullback does not break this 20 moving average, meaning it doesn't cross over it and it doesn't close above it, but it stays closed below, oh, you in the game. Let's say you got an entry here and you still holding the whole time. The market continues down. This is the rule of thumb. I told you the market goes from here to the 20, and then from the 20 usually as close to the 200 as possible, right? Sometimes it may get close to it and hit it, and sometimes it'll just get close to it and then go back up. All right, so as the market is coming down, this is what you look for. All right, I'll give you some sauce. If it's coming down below the 200, continue to look at your stochastic as well, right, to see when it hits the 6. Okay, and then notice how far it is away from the 20. All right, so let's say you was aiming for the 200, but it keep rejecting in this area, and you're like, okay, I don't know if it's gonna hit the 200. At least hold it until it hits the 20. Back again. Now, if you want to get out here, you can, but if you want to just another exit point, you could bring your stop loss all the way down here back to the 20. Or if you felt like it was going to do it here and go back to the 20, you could bring stop loss here. Bring it in a profit, bring it here, and know that it's going to get close to the 20 and knock you out of profit right there. Boom. All this profit is secured up here, all of this. Okay? So, if I'm confusing you, just watch it a couple times. But remember I said, if the market goes away from the 20 moving average, far away from it, like right here, it has to come back and touch the 20. Okay? If it breaks under the 20, rejects at the 20, then it's going down to the 200. That's where it's trying to go. Okay? And then keep in mind market structure. Pull back, pull back, pull back, pull back, lower. See that? Market structure, downtrend market structure. Okay? So, where would let's say I wanted to hop in on a buy as well. Let's say you missed this whole situation and you just got on the computer and you see this situation right here. Okay? Where we got the stochastic low. Okay? We can get in somewhere in this area. Stochastic low, we know we got to at least go back to the 20. I can buy here, hold it till it gets to the 20. If it breaks above the 20, pulls back and stays above the 20, rejects and starts going up, then I can still hold. But the moment we start dipping, let's say you didn't put no take profit there, let's say we start dipping a little bit, then I can go ahead and close my profit if you're just not sure. But if you feel like you're going to hold it, then let it push up. Let me delete some of that right there. If you feel like you're going to hold it, let it pull back, let it rise, and then move your stop loss into profit here. And as you notice, it never came back. And every time we get another pullback, we just move this stop loss right here. We move that up to here. We get another pullback, and the market goes up, move that stop loss up a little bit more, right here. And eventually, the market will come down, smack his stop loss, but all of this profit here would have been secured by that time. Okay? So, this is the type of stuff you look for whenever you day trading. And it works all day long. Now again, keep looking at the separation between the 20 moving average and the 200. When it's a big gap like that, that's good, because notice eventually it has to close the gap and get back close, right? And start to cross over, each other and stuff like that. So keep all that in mind. All right? I want you to notice this. Whenever you have news candles, let's say the news hits, right? News spikes up. Boom. What's the first thing you notice about this? Gave you time to answer. All right. First thing I noticed is that it's far away from the 20. Stochastic was high too. Stochastic was high on the H1, and it got far away from this 20 moving average. And where did it come back to? Boom. Rejected all the way back down and touched the 20. And that was your profit. So, matter of fact, let's just go ahead and do a scenario. Let's get a sell order. Boom, right there. All right, take profit at the 20. Boom, that's a $2,400 trade right there. If you look at it right here, $2,400. Nasty work. 290 pips. All right, this is how I catch trades all day long. So what you could do is on any pair, it doesn't really even matter. When news hits, it spikes pretty quick though. This is US 30, so, but if you're on any other pair and you're on my FX book or whatever you look at, for news, just check it out. But just hypothetically, let's just take a real life scenario that I looked at right here. Remember when I told you about the cross above the 20? Let's just look at this one as your actual scenario and see how much money could have been made if, you hold and don't fold. Let's take a peek at it. All right, so I'm gonna do catch a buy right. Let's go. We went above, we closed, buy right there. Boom. Stop loss at the zone. All right, risking 720 for a potential. Boom. That's $7,900. All right, crazy work. Sheesh. Let's say you seen it topping out. You could have got out at the peak, but let's say you was still trying to hold. Just hold till it get to the 20. All right, because we already see the stochastic got high. Boom. So you'd have made $6,146. Crazy work, right? So this is, and that's just the 85-cent lot. If I change this, I don't know if they'll let me change it, like mid. Oh, they let me change it. Okay. Let's see if I did a $2 lot. That's now $14,000. Sheesh. That same move. Boom. All right. I like that. So now let me go and do another scenario. Let's switch pairs real quick. And let me go. I'm just go GJ because I love GJ. That's my pair right there. I love rocking with GJ. I know how I do. All right. Same scenario. Look at this. One of the things I noticed about this one, we can do this one. It got way away from this 20 moving average. What'd it do? Shot straight back to the 20, shot through it, and shot straight to the 200. Now that's a beautiful trade right there. Stochastic was high. That was beautiful. So if you see it, even though I buy on GJ, everybody don't buy on GJ. They could buy and sell. I just normally buy, but this sell was beautiful. So let's look at it. All right, so let's say I sold here. Let's go to the top. Boom. Sell. Take profit at the 20. Boom. All right. So we'll do that. And then let me do my lot size. I usually do like a $2 lot. All right. So that was $1,000 right there. That's dope. That's good money. Right? That's good money. But let's say you just had the confidence to keep holding. Let's say that thing wanted to go. And let's move him down some more to the 200. That's an $1,800 day. Beautiful. Beautiful day. Right? Now, that could all change if my lot size changed. So let's say I go with a $5 lot instead of a 2. That's $4,500. All right, if I drag that back up to here, that's a $2,500 day at a $5 lot. Let's change that to $10 lot just to show you, what can be made in these markets with the specific lot sizes. That's a $5,000 drop right there. Okay, to the 20. And then if I bring it down to the 200, that's almost a 10K day. So now you're seeing how these days are made. Okay, how people are doing it. Let's just go to another smaller scenario, right? Because you might be like, that's a hypothetical. Let's go to a little better one right here. All right, stochastic low on the 1 hour. We're looking for buys on GJ anyway. This crazy work right here though. I'm gonna just show you a practical one though. So let's say we bought here at the bottom. Let's say I buy here, take profit at the 20. And this is what, $2 lot, 10. It's 10. But I'll just make it practical and do 2. All right, that's $500 a day. Just from this move to here, $500. I ain't got to be at work, none of that. I'm just clicking buttons and making money. That's it. Buy and hold, boom. But let's just say you felt like you wanted to hold longer and you see the fact that it crossed above, closed above, right? Came back, retraced, and went back above. You move this stop loss, right? At this point, you move your stop loss in the profit, all right? And you leave it there. So now you done secured about $605, right? And then the market keeps going up. Boom. It pulls back and goes up again. You move your stop loss up to right here. Now you up $900, right? Boom. It keeps doing it. And you move it up again to here, $1,700. See what I'm saying? Fire. You know what I'm saying? Fire. All right. So this is what I'm saying about market structure, about learning that the market only stays away from the 20 moving average for so long. GJ gives you a lot of that. You know what I'm saying? You'll notice it if you just look at it. Look, far away from the 20, boom, came back. Far away from the 20, boom. Far away from the 20, boom. It just keeps doing it. So even on the bottom, that's why I rock with it. That's why I love it. It's gonna give me everything I need. Anytime we get any type of pullbacks on GJ, I buy, hold till we get to a certain point and get out. Or if you want to hold long term, you can do that. So hopefully this video has helped you understand how to really get busy in these markets. As long as you got self-control and discipline, I promise you'll do great. I really can't promise you that, but hypothetically, right? Let's say that, because I can't promise you nothing, but I will just say continue on the journey, continue to trust God. Remember what I said about living in these last days. Stay close to God, right? Build the right relationship and everything else will follow. Man, I love y'all. Comment on this video what you think. If this has helped you in any way, you should give it a like. Tell your family members about the page, all that, man, because these are the times where people really need the financial literacy because things are getting crazy. I love y'all. Lord willing, I'll see you on another one. Peace.
God's timing is perfect. Patience has a purpose. Waiting for it's worth it. Right on time when we lay to the